Hey, welcome back to the channel, Fully Invested Phi Labs. I'm filming this today on November 30th, 2025, and today I'll be going over portfolio updates for the month of November, and then also this past week's performance. So with this has been week 27 or month 6 since I started investing my full paycheck at the end of May 2025. So yeah, halfway through a year of running this strategy. So we're going to see where my goals are at after month 6 and how we're doing after a turbulent November. That honestly served as a good stress test of the portfolio and also helped me reevaluate things and such. And yeah, before we get started any further, just want to give a quick disclaimer. This video is for entertainment and educational purposes only. I'm not a financial advisor. I'm just some dude on YouTube who self-taught a lot of this himself. And yeah, nothing here should be taken as financial advice, investment advice, or tax advice. All I'm doing here is really just sharing my personal investing journey and documenting my own results. So investing always carries risk, especially when using margin like I am. So that may result in a loss of principal. Please do your own research before making any investment decisions. And yeah, no returns are guaranteed. So yeah, let's get started. So as usual, you can kind of see the flow chart that I use here as far as how I fully live out of my Robinhood brokerage account and invest 100% of my paycheck every month. Yeah, I invest them in 2 buckets essentially, both in growth for capital appreciation and also to kind of help combat any NAV erosion that I get from the second bucket, which is high yield ETFs, which I invest in for a growing monthly income. I don't use a traditional bank account anymore. I fully live and pay bills out of my brokerage account, and I do that by using margin that bridges the gap between my monthly expenses and my monthly dividends, which are currently lower than my monthly expenses, but growing fast. So what I do is that I never sell any assets to pull money out of the account. I just borrow against the full value of my assets at a cheap interest rate of 4.75%. My mortgage right now is 5.95%. Like I wish my mortgage was that low. And yeah, so I borrow against the full market value of my account, similar to like a HELOC in a way in your home, but with stocks. So yeah, if you want an in-depth breakdown of this full chart, definitely encourage you to check out the link at the top right here. I do a big breakdown of that. So yeah, let's get started. So if we pop over to Robinhood here and just kind of check the numbers here. So yeah, right now the overnight numbers are coming in for ahead of tomorrow. So yeah, interestingly enough, like crypto seems to be not crashing, but like dipping again overnight. So yeah, something's happening there. BTCI is down, MSTY is down, Ethereum's down. But yeah, it looks like tomorrow might be a bit of a red day. Not much that's in the green, apart from like SEHD and basically my gold hedge at the very bottom there. But yeah, if we look at the past week, yeah, so I eked out a gain this week, which has been nice. So after last few weeks of a lot of red, honestly, was nice to kind of see this. So I was up 4.9% or 6.9K over the month. I was down a lot, obviously, given the lot of red days that we had. So like the market itself was probably down. Like if we look at VU, for example, the market was down, yeah, just 1.59%, but given the margin, that got amplified a lot. And given like some of the stuff that I've in crypto as well, which got hit hard. So yeah, again, that's why I give the disclaimer, like, yeah, margin's not for everybody, and I definitely don't recommend that. But yeah, that's how it's looking for me. So on the month, I'm down like 9% or 14.5K. On 3 months, I'm down 0.65% or $969. Year to date, I'm back in the green after like the little bounce back that has happened over the last week, which has been nice. So I definitely dipped in the red here. I was down 2.52% in the red, but as stuff has bounced back in the green, which is nice. So we'll see if I can kind of make back up this gap. So I kind of like topped out at like 17% gains at the end of October, and then that has just kind of steadily gone down. So yeah, that's how the numbers are looking there. So if we pop over to my sheet, we can kind of have a breakdown of a lot of this a little bit better here. So if we look at my top line numbers here, so the full market value of my portfolio, so if we add up basically all my tickers, all their market values, that basically comes down to this number here. So $291,936. So that's like the full value of my portfolio. Once you subtract margin, which I'm using 141.3K of, you get my net portfolio value here. So which roughly matches here. This is like a bit different because of the overnight performance coming in. But yeah, I was at 150 before that started coming in, $150,603. And yeah, if we look at like both my total return and my unrealized gains here. So yeah, with total return, I'm if I go off the full market value, I'm up 18.83% or $55,204. Or if we go off the net value, I'm up 36.66%. And then if we look at the unrealized gains side, so this with the big downturn that I've had in the portfolio over the last month, a lot of stuff has gone red, as you can kind of tell. So I kind of dipped in the negative here for the first time, I think pretty much since Liberation Day back in April. So now I'm just under, if I go off the full market value, I'm at negative 0.44% or negative $1,300 or negative 0.86% if I factor in the margin. So yes, stuff has ticked back up, which is nice. And like I kind of saw a similar thing when I was going through Liberation Day in April. So like a lot of the high yield stuff actually started going into the red, dipping in the red here as we can see there. But like as stuff bounced back, like that definitely kind of helped, like through having the dividends come in and then also just like getting a little bit of performance gains from the bounce back. Obviously not as much as like something that's pure growth, but still get a little bit. So yeah, just kind of keeping an eye on that stuff. Luckily, stuff is mostly still in total return green when you look at like the high yield stuff. WPAY took a hit by steadily going back up. ULTY has obviously kind of taken a big hit over the last month. It had a lot of crypto exposure during October, so I think it got hit, like BTCI and MSTY got hit pretty hard with the crypto downturn that happened in October from like that big liquidation of margin that happened. And yeah, and then MSTY obviously has been doing like really, really bad because that's basically just a leverage play on Bitcoin, and Bitcoin did bad, so MSTY did doubly bad. So yeah, crazy unrealized gains here as far as like down 72%, but still kind of getting in the income for that and kind of still monitoring that and all the single stocks there. And yeah, if we pop over down here and check on how stuff is separating between the growth and income portion. So I'm still just under 55% of my portfolios in growth. So yeah, split between some of the single stock tickers and then also my anchors here between SCHD, QQQM, and VU. That's amounting to 160.1K. And then on the income side, I'm at 131.7K. So that all adds up to 291.9K there. And yeah, so again, I know like some people question some of the tickers I might have in like the high yield stuff or the YieldMax and whatnot, but like, and some of the NAV erosion that gets hit on some of these, right? But again, I'm not as worried about the NAV erosion because yeah, 55% of my portfolio is in growth stocks. So this is where I'm hoping to get my capital appreciation, and hopefully that offsets a lot of the NAV erosion that I might get from some of these tickers here. And yeah, again, I'm not necessarily like all in on any one ticker, right? I'm not all in YieldMax, all in Roundhill or whatnot. I like spreading my risk and diversity across multiple companies and income strategies. So between YieldMax, between Roundhill, now I've introduced Neos between QQQI and Gold and BTCI really. So yeah, just spreading that diversity around. Just can hold the same underlying across different companies and have different strategies on generating income from that underlying, right? So yeah, that's how it's looking. And then as far as the margin health, so you can kind of see it here. So my margin maintenance is down to, my portfolio would have to drop $75,965, or sorry, down to that number for a margin call to get triggered. So that's basically a margin buffer of $74,638, right? Between this and this number essentially. And yeah, so really, again, I can't stress this enough. So like in Robinhood, so their buffer goes off this number, 49.60%, so the 74,653, so roughly matches here, right? And so they go off this number, which I think is a little bit misleading, just because it makes it feel like you're safer than you actually are. Just because, like, yeah, it says 49%, so you're like, oh, the market's not going to crash 49%. But realistically, what needs to happen is for the market to crash, or for your portfolio rather, to crash 25% to be basically the equivalent of this 49% number, right? So I think people definitely need to run your numbers properly to make sure you get the full picture of like what your portfolio would need to drop for your margin call to get triggered. Just because like this number only goes off your net value after margin. But what's important is to know what your market value of your portfolio would have to drop for your net equity to be affected, right? Because a 25% drop of this 291K number is the equivalent of 74K drops, right? So, and that's the equivalent of a 49% drop on your on your net equity after margin. So definitely worth checking your numbers, honestly, between that, especially as like the market has been very choppy, and not necessarily just go off like what Robinhood tells you here, because yeah, it's a little bit more rosy than it might actually be, right? And you're not kind of really factoring in the amplification of margin in that sense. So yeah, you really want to know what your number here is. And I might actually maybe do a video on this like later on, just to kind of, just fully have a self-contained video to go over that and how to calculate that for yourself. Maybe put out a separate spreadsheet for that. Because I think, this one's very important, I think. And this is the number I look at more so than this 49%. Because, I don't want to get too comfortable with this one, right? And and if we move on from there and check overall performance here. So if we pop over to Snowball, you can kind of see like those same pie charts. I break these down a little bit more granularly compared to this, just so you can kind of see. So how stuff splits up between the single stocks and growth and dividend growth anchor ETFs here. So you can kind of see that like I'm pretty close to 50-50 between my single stock tickers and my anchor ETFs. Might want to change this, and I'll talk about a little bit about this later. Added this new section here for the hedge for like my new gold position that I started last week. And this is a thing where I'm going to switch to this instead of doing the monthly put insurance. And like what I might do potentially is add like say $200 that I would put into put insurance into here every month. So, and this is actually on drip. So this should just kind of keep dripping onto itself and just be a nice little hedge for the portfolio that's uncorrelated to the market. And then, and then you see my high yield anchor ETFs here. So that's like the large portion of my high yield portion of the portfolio. So QQQI, ULTY, WPAY, XPAY, YMAX. And as you can see, the NAV of this has held up a lot better as anchors, right? And if you look at my single stock ETFs, this has like the NAV erosion, you can kind of really see it here. I'm still in the green when you factor in all the dividends, but you can kind of really see the NAV erosion in play here. So like of 65K that's invested, like 38.5K is left, right? So obviously MSTY got hit the hardest here, the 17K that's invested in there. But you can kind of see the NAV erosion kind of hitting between all these different positions, right? And and if we pop over to the growth section here, just kind of get a full picture of the portfolio here. So over the week, again, I was green, so eked out a 1.59% gain over the S&P, or 2,300. Over the month, I was down, as you saw in Robinhood as well, so this kind of links up to that. So I'm down, over $12,000, or 8.25%, 27%. So pretty much that bonus I invested at the end of October basically just got eviscerated, which is unfortunate, but that's part of not knowing when to time stuff perfectly, right? And honestly, that bonus I probably could have like separated that into a couple more buys rather than the big lump sum, but that's fine. Time in market beats timing the market is what I tell myself for stuff like that. Over 3 months, down 5.44% compared to the S&P, or $8,198. Over 6 months, I'm still positive over the S&P, which is nice. So it seems like I've kind of recovered a bit with like the little bump up that we got over the last week. So I'm just eking over a 2.82% gain, or $4,136. And year to date, just negative there, looks like, compared to the S&P. And a year, I'm just eking over it. So I'm just going to stop there, given that like it's kind of, I started pretty much at the end of May here, and then mostly counting from there. But before that, I wasn't fully in the strategy. But was enjoying like a good gain over the S&P for a good last 6 months until the downturn here over the last since the end of October here. So we'll see if we can bounce back like we did here, because like here it's like really separated out, but we're gonna keep an eye on that. And then as far as the dividends that I received over the last month, so if we pop over to November here, so I got over the month $4,913.37. So one thing to note is that given Thanksgiving, right? So normally I would have gotten these payments on this day, on the 27th. And then also I would have gotten my single stock stuff from YieldMax, HUI, MSTY, and NVDY on Friday, but everything was delayed. So basically the month is a little bit light compared, because I'm not getting these payments over here in November like I normally would have. But so that would have maybe pushed me to like 5,100 instead. But so definitely a lower month compared to some of the other ones, but definitely steadily growing from where I started. So had a record-breaking month with October, given that we almost had like 5 weeks of payouts. But here we're down to 4.9K, and and then just getting a lot. I'm not going to read out each of these ones. You can kind of see them here visually, like if I scroll through the week. But got like yeah, just over 1,200 on the first week between all these tickers. Got just over 1,700 between all these tickers on the second week. I'm just doing like quick math in my head. I should probably put these in the spreadsheet at some point, but yeah, just under 1,000 here on the third week. And then, yeah, just under 700 for the last week here. So this would have been closer to like 900 or 1,000 had I had like the payments that I'm going to get received tomorrow. But yeah, if we go over like the payments I got last week, so these yields are accurate to like that week essentially. Yeah, just because that stuff doesn't carry over from week to week, which is a bit unfortunate on Snowball. But yeah, so yeah, BTCI's payment came in and that was at 26.45%. ULTY's payment came in and that was at 76.65% or $211, and YMAX came in at 49.23% or $157. So yeah, definitely a bit of a hit at ULTY compared to other weeks. Like it's not hitting the 85% as it used to. And I think part of it is like, seems like they've kind of like shifted the strategy a little bit as far as like introducing even like more stable tickers like Costco and Google and whatnot to kind of help stabilize the NAV apparently. So we'll see how that works out. But also obviously that might have a result of kind of hitting the ultra high yield for a bit. But even honestly, if it hits 75 or even 65%, that's still a great high yield given that like normally the market does like 8%, right? Over a long period of time. So yeah, as long as it keeps paying out income and eventually maybe it gets back to green total returns, I'm happy, honestly. Yeah, so there will be NAV erosion at these high yield levels, right? So anything past like 50, 60, 70%, you're going to get NAV erosion. That's kind of inevitable. But that's why I kind of introduced QQQI last week to kind of help a little bit more, have a little bit more NAV stability. And yeah, just have a balance of like stuff that's ultra high yield and stuff that's not, right? So like XPAY might be more stable, QQQI might be more stable. Yeah, YMAX might be a bit more stable because it's fund of funds, but like ULTY, WPAY and all that, those will kind of erode NAV slightly. And I mean even YMAX, because it is a fund of funds, but it's still like pretty high yield, or between like 50 and 65% generally. But yeah, that's how the month's looking as far as dividends there. And yeah, and then the last thing I wanted to check on is if we pop over back to my sheet here. So as usual, I want to check on the tracking here as far as like how I'm doing since I started the strategy essentially. So yeah, this was like, yeah, month 1, month 2, month 3, month 4, month 5, month 6. So I started the strategy at the end of May, right? And I started with 205.8K in market value and 117.8K in equity value. And yeah, that's grown all the way to 291.9K in market value, and then in equity 150.6K. So you can kind of really see the strategy at work here, which is kind of great to see, honestly, because like really, yeah, if you calculate like, yeah, the 291,936 minus 205,847, so that's like $86,089 of added income, or not income, but value to the portfolio. Obviously, a lot of that was the paychecks. So like if we say factor out like 6 months worth of paychecks, that's still, yeah, $21,289 in gains, right? So if we divide that by the 205,847 times 100, so that's like 10.34% on the market value and gains, which is nice. So yeah, obviously there was a dip from last month, like from the 295, because that was basically like at the highs before it started dipping pretty heavily in the last few weeks. So obviously this took a hit, but really not so bad. So like at the end of the month, between like the paychecks that came in and the losses, like I'm really down like roughly 4K on the market value or 8K on the equity value. So my margin equity here is got hit a little bit at 51.59%, but still over 50%, which is great. Haven't dipped under 50 so far in the last 6 months, even with the dips, which is nice. My available for withdrawal is actually growing, which is nice to see. Just because, so you have to think that like basically my monthly expenses are like 9,000, right? So 10,800 goes into portfolio, and so half of that becomes available for cash available for withdrawal even after you invest, right? So net, I add 5,400 to the portfolio in cash available for withdrawal, but then I get, like, say for this month, I got $49.04 in dividends, and then after we minus out, so that just gets deposited to cash, right? So that adds that adds that amount to cash and essentially. And then I basically borrow in margin $9,000 to pay my bills and everything. So really, yeah, 1,304 gets added into cash available for withdrawal. So that's why this is like, this got plus essentially, which is nice to see. So yeah, this number didn't quite equal out because like, yeah, the 10,800, that's just my paycheck, but there's a lot of cash back and a bunch of other stuff that goes into that's not accounted for. And my quick calculation here. But it is nice to see that, like, yeah, despite me still living out of my portfolio and paying bills out of it, like my cash available for withdrawal is actually steadily growing from month to month as long as I keep my expenses at 9,000. And yeah, my margin buying power here actually went up as well along with that, given that this went up by 2,000. So that essentially doubles by a factor of 2, right? So right now my cash available for withdrawal is $29,830. And I basically have doubled that available in buying power, essentially. So I could borrow up to $200,995 on my portfolio, but I'm only using $141,000 of that. Still a lot when you factor that in. But yeah, there's a nice buffer here, and I want to keep this buffer pretty healthy, given that I'm living out the portfolio. And yeah, and then so again, I'm going over these numbers here as far as like the margin buffer full percentage, right? So my full market value, this value would have to drop 25% to trigger a margin call, or this value would have to drop 49%, but this 25% is the equivalent of that. And yeah, so my buffer went down a little bit this month with the downturn. So I'm down to a margin buffer of $74,638 between my equity value basically and the margin maintenance I'm maintaining. And yeah, and then after my monthly dividends received again, that's $409,904. Actually, let me just get the actual proper number. $903.51 actually. There you go. They round stuff out in Snowball. But yeah, that's the dividends that I got here. Or actually 913 looks like. I'll have to double check that stuff, but yeah, give or take 10. But yeah, so you can kind of see the progression here of the monthly dividends received. And yeah, so it's just nice to kind of see these numbers and the progression of it since I started the strategy, really. So I'll just kind of keep updating this every month, and then you can kind of get the progress of that. And then another way that I kind of track that as well too is through my tracking sheet over here. So I put those same numbers in here as well, just because I want to project out from there and kind of just get a rough idea where stuff will land, right? And kind of give myself some rough benchmarks as to where I might expect certain goals. So yeah, I added all these up here. So if we actually check against where my raw projections here, so this is just kind of based on all these numbers, right? Just my current blended yield, annual growth rate of 7%, which I'm trying to keep conservative. So like under what the S&P might be doing right now. S&P usually does like 8%, but now it's closer to 10, 12. So yeah, this is basically just assuming that the portfolio value is growing by just the monthly paycheck contribution, and then also just the monthly growth rate, right? 7 divided by 12 here. And yeah, so that's kind of factoring like my monthly expenses that are coming in, my monthly dividends, and that's kind of just projecting that out essentially. And yeah, so if we track there, if we check like month 5, right? So if we check this against this one, so yeah, it looks like I'm actually tracking fairly good given, because last month I was a bit ahead given the bonuses that came in, but then given the downturn, it's actually kind of brought me back a bit more closer to the projection here. So I'm a little above in portfolio value of where that projection was going to have me. My net equity is lower, obviously, given with stuff going down. So this is projecting at higher, and I'm tracking a bit behind that. My margin debt, I'm tracking a bit higher given how my last few months have been expensive with the Japan trip and everything. And yeah, the equity percentage here, I'm tracking behind. It was kind of estimating 54%, but I'm at like 51.59%. I was closer than the last month's one at 53, and yeah, the average monthly dividends here. So I'm basically calculating the average monthly since May, essentially. I just kind of took the average of this, essentially. Yeah, that. And so yeah, 50, 90, just because I don't want to go with the higher one to go with the projections here, just so it doesn't get so crazy. So it kind of keeps it a little bit more down to earth. So yeah, and that's tracking a little bit behind that, obviously, with everything that's kind of like gone down a bit as far as the income this month. But with that, we can kind of see where the goals are tracking here, right? So yeah, my extra net paycheck covered, yeah, on average, like once I keep kind of getting a higher number, that this number should kind of go up. But this is kind of trending more towards hitting that next year. which is looking like February 2026. And then over here for my monthly expenses covered, so the $9,000, this is looking more like February next year. Yeah, so that's where that would be. So February 2027, essentially, or in 2 years. And net monthly salary covered. So this would be like roughly 10.8K. This is looking like August 2027 now. And for my gross monthly salary, so that would be closer to 14.9K. That's looking more like October 2028 now. And my margin paid off would be potentially May 1st or May 1st, 2030. So kind of like the year that I'm hoping to kind of reach FI, right? Or just before, since I started the strategy. And yeah, so that's looking there. And like I've mentioned too in the past, like, so my 2x monthly gross monthly salary here would probably be hitting closer to somewhere in 2032, right? December 2032, which is a bit behind schedule because like my target is to hit FI by 40 years old here. So I'll have to see what I need to do to kind of help front load this a bit better. And I think that kind of plays into this here. So like I mentioned in the one video when I was comparing growth and high yield stuff, my margin paid off. I might maybe not pay it off. So like there's a point here where I reach like 75% equity in April 2028, or maybe even like 80% equity here in the portfolio in September 2028. What might happen there is that maybe once I hit that point, I might just kind of keep the margin on and stop paying it down. And basically like any extra that I have on top of my monthly expenses basically just goes into growth, or maybe even just into high yield, right? So yeah, that should kind of help supercharge things potentially. So yeah, we'll see what happens with there once we cross that bridge, because we're a couple of years away from that. Yeah, that's how stuff is trending. So stuff definitely, like as far as all the goals, they kind of all got delayed a bit this month. Last month there was a good pullback of those, or pull forward rather of those, given bonus. But yeah, with the downturn the last month, that's delayed stuff a bit, which is normal. So yeah, as I said, like these goals are going to be like pretty movable and like kind of be shifting based on how the portfolio does. So I'll kind of always keep you posted on that. And yeah, as far as kind of thinking through my portfolio rebalance, still thinking through, like, again, I'm not one to just kind of like panic sell and just kind of rebalance everything in one shot. Like even before the downturn happened, like I've been thinking about that, right? So yeah, just kind of talking through that. I'm not making any moves quite yet again, but I am keeping an eye on like NVDY, specifically MSTY, WPAY. So all my single stock tickers, really. Just because I want to potentially divest out of those and then just push them into like fund of funds like YMAX, ULTY, or WPAY potentially. But so far, part of me doesn't want to realize these losses. So it's like quite a bit of losses here if you go off the unrealized gains, but still green in total return. Specifically MSTY's a lot. This would be a big loss to realize. But yeah, no, for now, I just want to collect income on them and just kind of keep monitoring them, how they're doing on a weekly basis, how they've shifted to weekly income. But yeah, it's a thing definitely where I'm not contributing to these anymore. I'm mostly just focusing on fund of funds like WPAY, ULTY, YMAX, QQQI. Yeah, I'm apart from like GOW, which is my YouTube income, like I mentioned, like I'm mostly focusing on the fund of funds right now. On the growth side of stuff, like I've my growth side of stuff has definitely ballooned in single tickers over the last year. And again, I mentioned in that last video, part of it is kind of trying to rebuild the stomach for this a little bit. Like I've kind of done it with Apple and Microsoft over the years. Like these are my longest held positions, but I'm trying to add these with some additional ones here. Yeah, some days still, honestly, I'm kind of like, I should just kind of get rid of all my single tickers and just put them back in QQQM or SCHD or something like that. But again, I'm trying to rebuild my stomach for that. And yeah, just because when I look back at stuff that I divested in 2022, right, like all these tickers, I would have been so much better had I just kind of hung onto those instead of divesting and putting into other ETFs. So yeah, kind of want to rebuild my stomach for that, essentially. So yeah, still hanging on. The only thing I'm thinking about potentially is I still want to hang on to Apple and Microsoft, but I might kind of shave some gains off the top. That's what I'm potentially thinking. So maybe just kind of taking like the 14K off the top of Apple, 10K of Microsoft, and actually maybe put that into QQQM potentially, or SCHG if I want to kind of diversify a little bit. SCHG still growth, but it has some tickers like Reddit and Hood and stuff like that, and stuff that's like not necessarily in the NASDAQ quite yet, or because they're financial companies or a communication services company. Like, yeah. So yeah, we'll see. I'm still thinking on it. May or may not happen over the next couple weeks. We'll see. But yeah, that's kind of like the two that I'm kind of looking at. Like I might, yeah, just kind of take these gains off the top and maybe put them back in an ETF And then also that should kind of help balance things out as far as right now I'm pretty like 50-50 between the growth single stocks and growth and dividend growth anchor ETFs. So it might help shift the balance here a little bit to kind of reduce my exposure into single stocks, which are a lot more volatile compared to the ETFs, right? So yeah, keep me an eye on that. And yeah, and then one last thing, quick thing that I want to go over as far as finance video of the week, passive income investing. He has a great channel here, like a very big growing channel, 223K subscribers. Yeah, I've been following Adriano since the beginning of the year, really, just because I had to do a quick and fast deep dive of Canadian high yield ETFs back in the beginning of the year, just because my mom suddenly got laid off from her job where she was at for 23 years. And then I had to rapidly come up with like a little bit of a retirement plan for her and then generate some income for her with her portfolio. So yeah, I came across Adriano's channel back then. So yeah, he puts out some great content, covers both Canadian and US high yield ETFs. And yeah, and also he was like a big inspiration kind of following his story as far as like reaching FI at 34 on covered call ETFs. So it's unfortunate that he's, even despite his size, he's also still getting hit by like a false positive strikes, like stuff that I'm dealing with as well right now. So he put out this nice little video going over his experiences, mistakes, and kind of tips that he's kind of surmised from his experience. So yeah, I definitely took some stuff from here that I might maybe try. Like he was definitely a lot more persistent than I was with like support. So might have to give it another go with seeing if I can maybe get some strikes removed. But yeah, definitely for the YouTubers that are on my Discord or that follow me, definitely worth checking out to see what to look out for, especially in the financial space. But it's hitting all over YouTube. It looks like there's a lot of drama on Twitter about it. It's been really bad with the automated AI stuff. So yeah, and that's the video. So yeah, sorry I went long, but yeah, as usual, yeah, there's a lot of places you can follow me on YouTube, given all the false positive stuff. So like you can find me on Blossom Social here. You can see all my portfolio, the percentages, all my trades, and my posts here. You can also follow my portfolio for free on Snowball. So yeah, you can kind of see all the same numbers that I was showing you, all my pies, all my total profits and dividends that are coming in. So yeah, just love being transparent about all that. You can kind of see all the good stuff there. And also there's a Patreon that you can join. So this is kind of like my backup. Like I upload my full backlog of videos on here. So all my old videos on here that you can kind of watch. So yeah, in case there's any more YouTube shenanigans, there's this repository where you can find all my videos. I upload all my new videos on here as well too, as well as YouTube. So it's all for free to watch the videos like it is on YouTube. There is a little optional paid tier here if you want to support the channel a little bit deeper, but yeah, totally optional. And yeah, and then of course there's also the Discord, which is kind of nice and growing now. We're pushing 170 members. Yeah, all this again, everything that I'm showing is like free. It's all in the description below if you want to join. Yeah, I'm not trying to nickel and dime people with this and gatekeep. So yeah, feel free to join if you'd like. And there are a lot of like-minded investors here, whether they're living in their accounts or not. But yeah, kind of share stuff there. I share my trade alerts as well too, and any of my buys, so you can kind of get early heads up on some of that stuff before my videos go out. And yeah, kind of share some early thinking about all that. So yeah, sorry for the long and meaty video. A lot to go through this month, given the downturn. But yeah, hope to catch you in the next one. Yeah, I'll just have another portfolio update next weekend, so I'll catch you in that one. Again, if you got some value out of this, or you're looking forward to follow my portfolio updates or my Paycheck investing series, feel free to like and subscribe on this channel, Fully Invested FI Labs, or the main channel, Fully Invested FI, which I'll be back to posting on at the end of January. But for now, just kind of trying to find some safe titles and thumbnails on the Labs channel. So catch you in the next one. Bye.